Hello everyone. I am Jane. Welcome to our channel. Today, we take a look at motor vehicle insurance policy excess. An insurance excess, for the purposes of learning, is defined as the first part or portion of a claim that the policyholder is required to pay towards his or her claim, usually expressed as a percentage of the total insured item value. The primary reason why insurance policies impose an excess is to instill a duty of care and discipline in the policyholder towards the insured item and eliminate moral risks or hazards. Moral hazard refers to behavioral changes towards an insured item that might occur and increase the risk of loss when a person knows that insurance will provide coverage. When a person can avoid the potential consequences of a risk, their actions and attitude change, and there is a greater likelihood of a moral hazard. When one insures property such as a car, they have transferred the risk to the insurance company, but the insured item is still under their care, and because of this fact, it is important for the insurance company to ensure that the policyholder does not cause a loss or provide an environment for a loss to occur. It has been confirmed that when one knows they will be called upon to pay the excess, they tend to eliminate or minimize situations where a loss might occur where they will be forced to claim and pay excess. Having defined what excess is, and understood the primary reason why it is imposed on a policy, let's now see what are the excesses applicable to a motor insurance policy. The main excesses under motor insurance are 1. Own damage excesses. 2. Theft excesses. 3. Third-party excesses. 4. Young and inexperienced driver excesses, also known as novice excess. 5. No blame no excess clause. Own damage excess. This is an excess applicable to motor claims where the vehicle is damaged either through accident, partial theft, or fire and it has taken for repairs. The own damage excesses apply as follows. For motor private insurance, the standard excess is 2.5% of the vehicle value. Minimum and maximums vary with each policy. For motor commercial insurance, the standard excess is 5% of the vehicle value. Minimum and maximums vary with each policy. For motorcycles policy, the excess may start from 3% of the motorcycle value, or an amount set by the insurer. Minimum and maximums vary with each policy. When the car is taken in for repairs, the policy owner will be required to pay the excess before the car is released back to them. There are two instances where the policyholder will not be required to pay the excess. If the policy has an excess insurance. If the policy owner was not blamed for the accident and the policy has no blame no excess clause. When should you pay own damage excesses? Own damage excess is payable to the insurance company when the repairs have already been authorized. The vehicle will not be released from the garage if the excess is not paid. If the policy has an excess protector extension, notify the insurer when claiming for them to activate the claim. If the policy has no blame to excess clause and you are not to blame, bring this to the attention of the insurer for them to apply the clause. Theft excesses. These are excesses applied when the car is stolen, and the insurers are compensating for the total theft of the insured vehicle. In this instance, the insurance company will pay the insured amount less these excesses. Excess rates for theft claims apply as below. Motor private. Theft excess is 10% of the vehicle value if the car is fitted with an anti-theft device and 20% if the car is not fitted with an anti-theft device. Minimums and maximums are different for each policy. Motor commercial. Theft excess is 10% of the vehicle value if the car is fitted with an anti-theft device and 20% if the car is not fitted with an anti-theft device. Minimums and maximums are different for each policy. FO motorcycles. The same rates as the two above may apply, or each insurer will have their own standard. When will you be required to pay motor theft excess? Motor theft excess is deducted from the total amount of compensation you are set to receive from the insurance company. An example is, if the value of the insured car is $800,000 the settlement will be the value less 10% or 20% of that value, whichever is applicable. The third excess under motor policy is third-party excess. Under motor vehicle insurance, a third-party claim arises when the insured car accidentally injures a passenger in your car or a member of the public or damages someone's property. These third parties will hold the car owner liable and claim compensation from them, usually through the courts. Each of these third-party accidents will be documented and claimed separately from each other and from accidental damage claim in case the accident touched on two or more of the third-party incidences. Third-party excesses apply as below. 1. Third-party bodily injuries. No excess is applicable. 2. Third-party property damage. The excess is $5,000 for motor private and $10,000 for motor commercial. Motorcycle third-party excess vary from one underwriter to another. Where third-party excess is applicable, one is required to pay the same to the insurance company as soon as the third-party claim has been lodged. Third-party claims are lodged by issuing a demand letter or a notice of intention to sue. The fourth excess is novice or young driver excess. Novice refers to a person with little to no experience in a certain field. For the purposes of insurance, a novice is someone who has a provisional driver's license or someone with less than 1 year of experience in driving or as defined in each policy. A young driver, in this case, refer to someone who has not reached the age of majority, as may be defined in each policy. Having a novice or young driver control of vehicle steering exponentially increases the risks and as such, insurance companies will penalize the policyholder in case they cause an accident. Novice or your driver excesses are $5,000 for a motor private policy and $10,000 for a motor commercial policy. Each underwriter may also define their own limits. Motorcycle is defined by each underwriter. No blame, no excess clause. This is not an excess amount payable by cash, but rather, a clause inserted into a motor policy to provide relief to a policy owner when his or her car is involved in an accident where he or she is not at fault. The clause provides that the insurer will pursue that third party blamed for the accident directly to recover the excess. The only thing insurers will require here is a police abstract indicating the name and contact details of the third party at fault. What you can do as a policy owner to benefit here is to ensure that your policy document indicates this clause and clearly explains its application. Excesses are out-of-pocket expenses for a policyholder and are inconvenient. Some insurers offer policies that can cover the amount you will be required to pay as an excess when a claim occurs. This is known as excess insurance or excess protector insurance. In Kenya, the most common excess protector policies are purchased under motor insurance excesses. However, the excess policy can apply to just about any insurance policy. Benefits of purchasing an excess protector policy. Just like in any insurance policy, an excess policy will save you money when there is a claim that requires you to pay the excess. It also protects you against uncertainties. A claim may occur anytime and, more often than not, it will happen when coffers are dry. Types of excess protector policies under motor insurance. A policy owner can decide to purchase the excess insurance for any of the excesses we have covered above: own damage, theft, fire, third party, jointly as one, also called all excesses insurance, or severally depending on their preference. Excess protector cost or premium calculation. Excess protector policy is a percentage of either the car value or the highest excess amount. Example: accident excess is 2.5% of the car value, or an amount agreed by the insurer. All excesses rate is 10% of the highest amount one would ordinarily pay as an excess, or an amount agreed on by your insurer. That marks the end for us today. Let's meet again soon. Subscribe and check out our community tab for exciting polls. Let me know what you would want me to cover in our next video by leaving us a note in the comments section.